Yes, so welcome to this last workshop. We're going to talk about go-to-market strategy with Sami, and I'm going to introduce Sami after this. So your Flute Accelerator is operating under the NPBSF project, and this project is supported by the Southeast Finland Russia Cross-Border Collaboration Program, and it is funded by the EU, Russia, and Finland. So this is what we have been doing so far, and thanks to all of the teams who have been active in these workshops. It's been a pleasure. And yeah, today, go-to-market strategy, next week. And by the way, I said that on Monday. Today, I will tell you what time the demo day is. It's from 11 to 13. And that's both Finnish and Russian time. So I put that in your calendar. I will also update the calendar link that I sent you earlier in April. So yeah, that's about it. I will stop sharing. That was a quick, brief introduction. But yeah, Sami, I've sent a quick intro about you. You're from Vendetta Capital, a VC firm, and you're going to talk about how to make a market entry. So yeah, I think if you have a short intro of yourself, you can do that. But the floor is yours. You can go ahead.
And I guess the date is wrong, but that's fine. Thank you, Mikko, for inviting me. I'll start by just very quick introduction of myself and Vendetta Capital, and then we thought that we would start with a hopefully fairly short talk about go-to-market and what are the different models and what needs to be considered. You know, what is really the whole package. But my background is mostly in software, so this deck is probably tilted a little bit towards the software companies more than hardware or materials and whatnot. But it seems like many of you are actually software companies, so hopefully it works for most of you. And I think it's generic enough to maybe ignite some thinking also in materials companies if you are one. So myself, I've been in startups and high techs since basically 1998 when I left my studies and joined the business. I've seen startup to IPO cycle at SSH, one of the stock listed security companies in Finland. Done marketing, sales, product management, general management, and during my time at SSH, I spent 3 years in Silicon Valley, opening their office, for the new market, doing market entry truly, with actually 2 different products. Once with OEM model where our product was embedded to the likes of Cisco's of the world, and then at during later years, I also spent a couple of years in Boston running the U.S. operations as the country manager. In addition to that, I've done interim CEO-ships. A couple months kind of migration CEO-ships in companies like Blue Giga, which is a Bluetooth embedded hardware company that got acquired by Silicon Labs, and also being some interim CEO for Concilio Networks that actually ended up dismantling itself, never found a business, which is very good learning as well. And in addition to that, I was co-founder of Contena, which is a container management platform and dashboard company that was also acquired by Mirantis about a year and a half ago, and did marketing, sales, go-to-market, general management over there. And when I go through the go-to-market slides here, I'll try to kind of drop in my learnings and case, through the kind of a short case study type of way from my background, what I've seen work and what I've failed at, and hopefully that gives you an idea and help in redefining or defining how you want to do your go-to-market. In addition to the operating background, I've done a significant amount of VC investing and fundraising. So I've been on the other side of the table as well. Invested early in MySQL at Holtron Ventures, Navicor. Both companies got acquired, and the acquirers got acquired. And then at Connor Venture Partners, I invested in Neo4j, for example. Some of the learnings come from Neo4j, for example. They've already raised a couple $100 million and counting, and they're on an IPO track to NASDAQ. and so forth. But I'll drop in some kind of cases and examples throughout the presentation from these companies that I've worked with in the past. Then just very shortly about Vendetta Capital. So we are a Finnish VC fund that invests over the Nordics and Baltics. With that said, we have no rules preventing us from investing anywhere in the world. We actually have a Russian software team that we invested in, but the vehicle is a Delaware corporation, but the team I think sits in Russia. So we're fairly flexible in what we invest in, but our main target is Nordics and Baltics. We typically enter companies in their pre-Series A phase. So there's already a product, a little bit of revenue, recurring revenue that we were able to kind of look into and analyze and then do a investment decision based on that. And we are very business-to-business SaaS centric. And what else? We invest 1 million when we enter, and then we can go up to 5 to 7 million in the life cycle of the company. So we can really be a significant investor for your SaaS company. And obviously, as we do SaaS only, we think ourselves as being very helpful for the company growth path to the A round and beyond. Then the topic of today, go-to-market strategy. You know, Wikipedia defines it in a very scientific way of how you use resources of an organization, you know, to deliver your unique value to your customers. But simply put, for startups, it is really that you know what is the problem you solve, you know, what is the product and solution, the service, and what truly is the problem that solves. Who do you really sell it to? You know, who is your target customer? What is your ideal customer profile you're trying to reach? And then, of course, you need to be very aware of your competition, because that really significantly affects how you navigate into the market and which target segment you want to go, which ideal customer profile you want to target. And of course, eventually, many people, when talking about go-to-market, many people just think about the distribution, you know, how to sell. Do I apply channel? Do I do online? Do I do inbound or outbound or whatnot? And in this deck, I'll shortly go through, you know, things around these topics. But all in all, when you look at this, it's just good old, you know, 50s, 60s invented kind of marketing for peace for the most part. You know, a lot of new concepts or namings for things, but it's still about, you know, product, price, place, and promotion. Before we really get into kind of deeper details, kind of a note I want to make that you really, when you do your go-to-market, you have to constantly measure everything you do. And it doesn't matter if you're an online company, software company, hardware company, it's still try to get data throughout your operations, everything in your operations, and constantly analyze it. Because over a longer period of time, that data starts to tell you something. And that something then helps you navigate the world in a better way when you're doing it in an analytical way. And if you're a hardware company, it's just about, you know, looking at data on you know, on your website visitors, for example, who's really interested in your thing, and analyze that and try to really, you know, start seeing clearer that where the company is headed and do A/B testing with your messaging, for example, and you know, really truly measure and validate if you're doing the right thing and if things are moving in the right direction. This is something I'll come back to in almost every slide going forward on the deck. So first, you know, the 4 Ps. First, the product, and very often, I don't know, but I would expect that this is the same thing for you guys, that in most cases, when startups are founded, they're founded on the product idea. The founders get a great idea of this product needs to exist in the world, which sometimes stems from a problem they've seen in their work or just an innovation, invention, you know, trying to become an innovation, you know, from a university. But it all basically starts with the product. But the thing is that, you know, your product definition, your first prototype, it will get ripped apart the first time you meet a customer. It will. It's just a fact of life. No matter how well you thought it through, and no matter how well you build it, it will be ripped apart. And because of that, try to engage with your target market, your target segment, your ideal customer profile as early as possible. Do customer interviews, to analyze your competition, look at the whole thing. But it's really about that engagement. You have to have the strong product vision, but constantly test it along the way, and talk to the target segment as early as possible in order to really understand that is your product something that they look for. Almost never you can do that. You go to a customer and ask, what is your problem? Let me solve it, because they're not going to tell you that they don't necessarily see those problems. So you need some kind of a loose idea of, this is what I'd like to get you. Is it something you could really use? And try to go really deep with them in those interviews. But do early customer interviews. Do them throughout your company life cycle, to be honest. And if you think of software companies, especially SaaS, release early, start getting feedback, start getting analytics, measurements from your product, from the whole pipeline, and continuously engage with your customers in order to analyze if you're going to the right direction or not. You don't really need to get to an MVP before you release. Just release something and try to get it in front of your target market and see what happens. And release often, continuously bring in more value. And certainly, like I said, put in all the different measurements tools so that you know where they come from, what do they do on your website, when do they sign up, do they stop the sign-up process for some reason? And if so, try to improve that. And then also put in product analytics to know what features do they use, what features don't they use. All of this data will help you then navigate further into the market and really truly eventually understand that what sells in your product. You don't necessarily really know that upfront. Of course, it's more challenging if you have a hardware product, especially if you have a hardware product for consumers. It's really hard to gauge those customers early on before you actually have the product. And unfortunately, sometimes it may be a product that nobody really cares about. Those are really harder to test up front. You can do interviews and different research and so forth, but it's more challenging than with software, for sure. So then, customer. This again, when you found a company, when you start off creating your product, you probably have a loose idea of, I think this product can be sold to these guys, American banks or European left-handed consumers or whatever. But you still should very carefully consider what segments you go after, because even if your product is totally horizontal, you still need to define, in order to be efficient in your marketing, in your sales, you somehow need to think through that who will be the first primary buyer for this product, so that you can really put your efforts into getting those customers. Even with horizontal products, Neo4j, it's a graph database, very horizontal. Anybody can use a database, right? Everybody has a data that is interconnected, so they need a graph database. During the very early years at Neo4j, we were really puzzled on the board level and operational level that who does this really like? Who does really want to buy this today? And we actually we were able to kind of clarify that by we created the matrix of use cases and industries, type of users. And all of a sudden, when we started filling these cells in that matrix, we started to realize that, okay, let's say there's a clear use case for identity management, or there's a clear use case in equipment management in IT segment for this database. And because of that, we were able to then do case studies and other marketing that is directed exactly to that one box. And through that, we started getting more and more similar customers and similar prospects to the pipeline. So because of that, it's really, really important that you apply some type of targeting of the customer segments. And I'm a big believer of Jeff Moore still after the years, and you know, it's really, I believe in the bowling alley kind of analogy that you know, you first need to hit the first pin, whether that is, you know, American mid-sized banks, before you hit the second pin, which would be the large American banks or whatever. But kind of do a stage approach to your target markets. And once you really analyze through this, you come up with your kind of ideal customer profile definition, and that helps you really put efforts into the right target segment. And again, you got to continuously measure if that resonates, if your vision, if that resonates or not. Then another thing about the customer is it's really knowing your customer very deeply. If you know, just think of like anything in IT, very often the first contact you get from your prospect is an IT engineer or an architect. But it's never enough to convince that one guy. You got to go very much deeper in the enterprise in order to close a sale. An example, Bluegiga. We sold Bluetooth modules, hardware modules, to one of the largest barcode scanner companies in the world. This was back in the day when most of the barcode scanners were actually corded. So there was a you know, cable between the base station and the scanner. And they wanted to cut that cord and put in Bluetooth. Now, to be able to sell to somebody like that, it's not enough that you convince the wireless engineer that was tasked to cut the cord. You needed to also convince the electronics designer, the casing designer. How do you fit that Bluetooth module into the casing of that barcode scanner? You needed to convince quality assurance that you know, your module will actually tolerate and last the most stringent, like you know, usage tests by like DHL trucks. You know, they throw the scanner on the back of the truck and they try to the next stop, and the scanner just jumps up and down on the back. Is your product, is your module good enough to last that type of a usage? So it's not enough to just sell to one guy. Same thing with SSH. When we sold our key management product, for example, it's not enough to convince that one security guy that has a problem and need to manage their keys, cryptographic keys better. You need to convince the whole chain of people, all the way up to CISO and COO, before the sale happens. So it's not enough to convince that one guy, but that's the starting point. And then you need to expand in the customer. And really, when you think of your target segments, consider what the sale is really going to look like eventually. How deep you got to get into the customer, because the deeper and wider you need to get into the customer, the more difficult your sale will be, and longer the sales cycle will be. Then about competition. This is another very critical thing where very often founders just ignore the competition because they think they have something so unique that there's no competition for it. But the competition is not only the direct substitute of your product. It can be something that just eats a little piece of it, but it's enough for the customers, for example. And the competition can come from just basically sharing the same budget. It's not necessarily an overlapping product, but let's say you know, big bank has top 10 projects that they only do this year. If you're trying to sell to them and you're not one of those top 10 projects, no matter how much they need you, they probably are not going to buy anything from you this year. You're competing for the same budget, and that budget is limited. Again, maybe a couple case examples. So at SSH, for example, we selling a key management product. We had a really bad competitor that was selling certificate management product, and they had a little bit of key management added on top of their certificate management. But for many customers, it was enough. It was enough for them to check mark that I now have key management covered in my certificate management, although it really didn't do the job. But in the customer mind, it was enough. An example with Container, and this actually led us into pivoting to a whole new segment. We started off with our own container management platform. It was all home built, open source. And then Kubernetes came about. which is now really the prevalent container management platform in the world. We fought against it for a little while, only to realize that we will never beat Kubernetes as a competition because it had such a momentum behind it as an open source project. And because of that, seeing that situation, realizing that situation, we basically changed our direction completely, adopted Kubernetes to be the core of what we do, and then build really great dashboards and other tooling around Kubernetes. So our business all of a sudden became being buddies with Kubernetes rather than being against Kubernetes. Distribution. So how do you get your product in the hands of your customer? And again, very many models can be applied here, but thing to really consider is that it's really, your channel is truly dictated by your target market and the product you sell. You cannot pick a channel, a distribution model that is not aligned with your core business. So let's say that your product price point is 10K a year. With that type of a price point, and sometimes price point comes from competition, sometimes price point just comes from the value you deliver. But if you have a 10K price point in dollars or euros per year, you cannot deploy direct sales model that includes outside sales force, because you don't cover your selling costs, you don't cover your customer acquisition costs, sending guys out in BMWs trying to convince the customer to buy 10K deal from you. It's not profitable business. So sometimes your distribution is dictated by the type of product you're delivering, the price point you're delivering. And of course, the cheaper the product, it's typically more marketing centric, your sales model. Marketing automation will take care of the pipeline for the most part. And even the sale can be closed online, so that only very few customers are then dealt with direct sales force because their size is big enough, to cover the cost of that type of a sales model. And I will talk about a little bit more about the product-led growth model, which is truly the inbound marketing-led model taken very far, and basically applying things like freemium product or free trial, and a lot of automation up front in order to feed that pipeline. The little chart on the right-hand side kind of tries to tell you that what model works for what type of product. So if you have a complex product, it very often field sales, outside sales is the only way to convince the customer. Same thing, if you have a very high price tag, the cost is really high, that's when field sales certainly work a lot better than self-service or inside sales or online sales, for example. So you need to think through all of these things in order to define what is possible for you, what can be done, and what really is the best model for you. And this picture kind of shows that type of. This is a typical kind of a market-driven, but still kind of sales closing type of a business, where, of course, early in the funnel is the business. No, it's marketing team taking care of, finding the customers either through content or paid advertising, or SDR work, calling outbound, turning those into visitors on your website, which then one day turn into, through the different criteria applied, to marketing qualified lead. And then marketing qualified lead, as that is walked through the pipeline, will become sales qualified, sales accepted lead. And then sales start to work on it and trying to close the customer as a customer here in the middle. And then starts your scaling, and customer success team enters. I have another picture for the product-led growth model, and you can compare how that looks like here. And then word of caution that I like to tell everybody in the startup circles is that channel very, very seldomly works as a startup go-to-market. just a fact of life. On one hand, you want that direct access to the customer because you want to get the feedback early on that helps you shape up your go-to-market further. But also, if you think of the typical IT channels, for example, the consulting companies, PVCs of the world, Capgeminis, HPs of the world, trying to get to the market through them, you're just shouting in the darkness because they have hundreds of products on their lists, and there's probably a lot of products that are a lot easier to sell than yours because they already have a brand on the market. They already have a lot of references on the market. So you trying to convince HP sales guy in, I don't know, Southeast Asia, to sell your product versus some other product, you have a really tough job convincing that guy until you're already a recognized, reputable brand. You have great references that are recognizable by everybody on the market. So up to that point, it just doesn't make sense. Now there are exceptions. You may be some very specialized company that has a very specialized channel. Let's say for security, I'm familiar with security, but let's say security, you have a penetration testing tool sold through penetration testing companies. That might be a channel for you. But then it's a very specialized organization that really understands your product, and it really helps them in their business when they go to the customer. But those are really rare occasions. And my general advice is that use channel only at later stages in your go-to-market. I guess I'm talking quite long here, but anyway, let's still jump through the product-led growth slides. The whole thing was coined by OpenView Venture Partners, and product-led growth model is really a go-to-market and growth model where the product is really in the center of your go-to-market, meaning that you let the customer get to the product, experience the product, become really convinced of the product, pretty much with no touch or low touch. And you let them do it for free until they really truly become convinced that this is the product they want to put into use. And this is kind of if you put it in a context. So the CIO era, and this is still ongoing for some software products, some hardware products, where the CIO is the king. You need to convince everybody from top down that you need to buy my product, and that means that you go to their offices often. The deal size, of course, then is quite big, but you need those bag carriers to be there, for the customer, and that's a long sales cycle, but it's a large deal size type of thing. But this was still how software was sold, end of 90s, early 2000s. Then we entered the kind of the executive era, and this is when the Salesforce of the world, type of companies arrived. The delivery is through cloud, but you still sold kind of from top down. You convinced the VP that takes Salesforce into use, and a sales VP could do that without really consulting a CIO or CISO or anybody else. They just activated an account and started using. And here the deal size is this little, and again, this is still a model some companies use. Deal size is lots smaller than the CIO-led deals, and these deals can be closed with phone and online. And now we're entering the kind of the end user era, or has entered the end user era, which is really the product-led growth era, where you convince the user, the end user, to activate your product. And this means that the deal sizes are smaller, but everything is more automated, and the business is typically closed by just entering a credit card on a shopping or on the e-commerce side. But this is the very scalable, very fast scaling model. And there's a lot more on this, and I've ripped off these slides mostly from OpenView Venture Partners. There's a link on the bottom. You should really go and read everything they do. Really a great VC from Boston. And now if you compare the product-led growth model with the model we looked at previously, the early part of the funnel is a lot shorter because everything is just geared towards turning that visitor into a trial or free user for the product. And everything in the website should really just feed towards that. And once they sign up and put the product in use, that's only when sales team, comes to picture, but not really selling. It's really more about ensuring that the customer is successful, even with the free product, because then eventually one day they will put in that credit card and become a customer. And then you start really supporting them big time and making sure they scale all the way to a very, very large customer. And this model is not in conflict of the outside sales model necessarily. This can also feed your outside sales guys at the end of the funnel to the left, to the right side, the leads that the outside sales guys can call on and then make an enterprise deals. Let's say Atlassian is a good example. They very much, drove people to sign up and just start using one of their tools. But over time, once those customers really grew, they certainly had a sales force that started calling on those customers, trying to convert them into enterprise deals that cover everybody in the company. 3 main points in the product-led growth. Design for the end user, because you have to convince that one single user first to put the product into use. Listen very carefully what they do. And as I said in the beginning, release your software continuously and monitor how those releases are doing. Are they driving usage or are they eroding usage? And of course, be personal, talk to each individual user as individual. Don't do, generic spam emails, for example. And provide value. Give them the product, give them significant value in the product before trying to get money out of them. This is a really important part of product-led growth model. Remove all the paywalls, remove all the unnecessarily credit card entries until they become convinced that they want to buy the product, because all of these hurdles you put in front of them will just churn them off too early before they become convinced. And of course, the third one, invest in the product. Make sure that the product is just perfect all the way through, because that is then also how you grow going forward. Kind of already said this in the previous slide. There's a really great webinar that we had early in the year. We had Yevgeny from Bolt presenting how he experiments very quickly with new products, just releasing, analyzing, measuring what happens. If it goes well, okay, sure, let's put marketing money behind it to scale it. If it doesn't, we'll pull it out and we'll work on it further. I really recommend this for the kind of early prototyping and market testing part of the product-led growth. Talked about this already quite a lot, but really enable the customer and take all the hurdles from the customer before they become convinced of your product. At Contena, we spent one fall, we spent 4 months, the whole team. We didn't, write a line of code. The whole team was just concentrating on the pipeline conversion, making sure that everything that is there for the customer works beautifully and the conversion happens. We actually improved our conversion from website visitor to product in production. We improved that conversion by 70% because we looked at each step of that customer journey and enabled and removed things like needing to enter credit card before you already had tested the product. We only asked for the credit card after like a couple of weeks of using the product, saying, oh, well, no, actually, sorry, it was 4 weeks. So at the end of your trial period, we started asking, do you like the product? If you like the product, enter your credit card so that you're not disrupted at the end of the free period. When you continue to build your product further, just continuously think about how the product can drive the customer acquisition, conversion, and expansion. Like everything you put in the product, always think about how does this help me get the product out, get the usage high, and so forth. And this is really for the full customer journey, like I previously said. Just everything in you that you do needs to be thought through from the point of view of scaling the usage base. What needs to happen in order to scale your users. A lot of measuring, a lot of testing, A/B testing, to continuously test your user base and the conversions at each point. Do A/B testing with landing pages. Do even A/B testing with the product. Have 2 different UIs for maybe 2 different signups, and see who's more engaged. And what to measure? Everything, of course, like I've said. But the most important thing is growth rates through the whole funnel, from the first time they hit your website to scaling the usage. Measure every step, every day. Customer acquisition cost, payback time is very important, and of course lifetime value versus the customer acquisition cost. Retention, are the customers staying, and especially kind of local retention. Do you lose logos? And if you lose logos, are they in your ideal? Going back to the beginning, are they in your ideal customer profile, or are they users that you weren't targeting in the first place? But make sure your retention stays really low. And AppFollow in our portfolio is a really great example of company that measures everything. They have over 70,000 users on their platform. You wouldn't be able to manage that company unless you measured everything and you really build everything at that scale. Everything needs to be automated because nobody has hands to really manage 70,000 users. There was another webinar early this year with Kyle Poyer from OpenView Venture Partners that we arranged. Very, very good webinar to look at if you're in a software and looking at doing SaaS and doing product-led growth. That was it. Sorry, I talked a little longer than I thought, but I guess I was a little carried away with putting the decks together yesterday. Yeah, I think very different businesses for sure. All I think good ideas. Go-to-markets are going to be very different. For of course, they're always unique in your situation and for your product. But I mean, obviously, a lot of thinking has gone into them already. So I think very good plans to be tested in the market, to be honest.
So in general, the go-to-market strategies were there to some extent, and they were thought out.
For most part, some guys were maybe not as firm yet, not as convinced what it will be, but.
Mm-hmm.
And like I told everybody, I'm happy to also work on this later on. You get my email address from the slide deck. So, yeah.
Perfect. Thanks. So, any other general feedback, or was that your?
No, that was my feedback. I mean, experiment, go out there, try it out, measure, reconsider, and if it obviously doesn't seem to work, then you have to change things. But it's it's always a unique situation, no matter what the product is. You just have to go out there and start learning. So.
Okay, well, that's good, and I think that wraps up this session. And for all of the teams, a huge thanks for being so active during these past weeks in these spring workshop sessions. And yeah, this wraps up the whole series. But we still have the demo day on Monday. It's 11 to 1 p.m. So perfect your presentations to that. It's 7 minutes, right, the whole page. So it's quite a long time, and then 5 minutes for questions. But I think Dimitri will send you more info via email about it. But yeah, on my behalf, a huge thanks to Sami for joining us today and giving us the knowledge and feedback. Truly appreciate it. And to all of the teams, thanks for taking part in this series. I think we can end this session. Thanks again, Sami. Thanks, participants. And see you Monday.
Thank you, guys. And good luck with your go-to-markets and the demos. So.
Thank you.
Thank you so much.
Thank you.
Thank you very much.
All right. Bye-bye. See you.
Bye.